Following on from lesson 1, everybody, there is homework. There is homework for every single one of the lessons within the Bootcamp Trading course. Lesson 1 homework is to create a demo account at a broker or multiple brokers of your choice. Navigate around those broker platforms in order, and that's why this is bold and highlighted there, in order to become familiar with the operation of the platform chosen. Place both buy and sell trades, long or short if you like. Add orders, long orders, limit orders, stop orders, and generally find your way around the deal tickets. The reason for that is so that you are familiar with what exactly is a pip on your broker. Is it the same across multiple markets? For instance, a euro-dollar pip probably won't be the same as a NAS or a Dow pip. And it again probably won't be the same as a gold or an oil pip. So use your demo account to find out those things. The other part of your homework for lesson 1 is to edit your daily trading plan. I'm going to open one here for you now. It's in there and there it is. So we're opening a daily trading plan. It should appear on screen. There it is. This one, it's not blank, I know, but ideally you must edit this one to suit yourself. You know what times of the day you are available. You know what days of the week you are available to trade. You must, and that's why it's bold and highlighted and bigger letters, you must check the news, and it should be included in your daily trading plan. I also recommend that you check pivot levels. You will see them either in this lesson or the lesson that's to come, lesson 2. I use Camarilla levels, but obviously you can use Woody's levels, Fibonacci levels, lots of others. Camarilla would be my favorite, but that's my personal favorite. Identify the markets that you wish to trade. I like the NAS, the DAX and the Dow, but you might be very different to me. You might want to look at currencies. You might be looking at longer time frames. Anything is possible, but make sure it's included in your daily trading plan, because if something goes wrong and you take a loss, you need to check, was that in my plan? Did I do something off plan? And that will help you to come back to your plan. You'll note that I've said by 7:30 here, then between 8, as in 30 minutes after you sit down at your office computer, from 30 minutes later, at least 20 really, that's when you're allowed to be looking for entries from key entry signals, looking for high probability, low risk entry opportunities. I recommend that you have a target for your day, a target of profit, a number of pips, after which you will decide you've done enough, you've had enough, and you'll stop before approaching anything resembling burnout. You should and could also edit in here to suggest a number by where you will stop if you have a loss, and it should be less than your daily target. So if your daily target is 50 pips of profit, then your loss should be 20, maximum 25. If you lose 20, 25 pips straight out the gate, stop and have a look at what you did, why you did it, how it happened, and did you miss something? Did you miss news? Did you miss pivot levels? Did you miss divergence against you? What did you miss? Because something will be amiss there. So all of this section is editable for you, by you, to suit you. But below here, from here down, obey the rules. You should not edit. You should obey the rules. You must obey the rules. Move through the gates, assuming you've learned them and you know what they mean. Move through the gates in the appropriate direction. We discussed them in lesson 3. Follow the 3-strike rule, as in if you have 3 mistakes, and I don't care if the mistake made pips, profit rather than a loss. Maybe you meant to buy the NAS and you bought the Dow and you made more pips than you should have. Still a mistake. Use it and use it against yourself. So 3 mistakes, just take a break. That's all. Sit it out, have a cup of coffee, walk the dog, take a stroll. You're doing something wrong. Your head's not in the right place, maybe. Then avoid late entry. Ideally, you'll forbid yourself to enter late. I certainly forbid myself from late entries. We used to call it, leaky. Late entries are killing you. Follow only valid and strong signals, ideally with the trend, the double cross, the bands, the strategies, the indicators used in your strategies. Follow those rules and those signals. Remember, the strongest moves are when, I've written all 3 time frames here, but 2 time frames is what we observe in the sessions. So the strongest moves are when time frames are crossing together. Watch your charts, not your balance, as in don't bank every time you're up 5 pips or something, unless that's your target. But if your target is only 5 pips, then your stop loss needs to be only 2, and that's very unlikely that will work well for you. So keep an eye on the charts and follow the signals and use your rules. Here I've written no trades before 8, but really what it means is just beware of the speed bump. At market open, be it 8, 9 for the London banks or 14:30 hours for the US markets, there is a speed bump. Be aware of that speed bump, a spike and then a return to normal. Don't trade outside or against the Camarilla levels. Just be aware of support and resistance generally is what that means. So if there's support in the way of a buy or a sell, there's something in the way, be aware that it's there. Price can go through the line in your favor, but it can't come back. If it comes back, it's probable you need to close. Be aware. And then a note here, a minor note, a consistent trader is able to fully immerse themselves in the execution of each and every trade without attaching consequences to it. Basically, that's saying that you need to be a little bit of a psychopath, devoid of emotion in your trading. Not that you want to go and cut things or people up into small pieces by any means. Just in your trading, avoid emotion or employ a level of emotional intelligence that keeps you safe and sane. Thank you for watching the homework section of lesson 1. Trade safe. We'll see you in the next one. Bye bye.